Welcome to finshoot.com. If you haven't already, check out our other videos on technical charting at finshoot.com. Today we're going to take a look at two of the simple charting methods or technical analysis pieces that go with foreign exchange trading. The first being the simple moving average, and the second being the MACD or moving average convergence, divergence. Firstly, simple moving averages simply take the last X period of closes and convert them to a moving average. In this case, what we can see is on the chart, I have chosen here as the simple moving average for 7 periods, 14 periods, and 21 periods. These simple moving averages are then loaded into the system and will take this last 7 periods. If, for example, you're looking at a daily chart, it will take the last 7 trading day closes, the last 14-day trading day closes, and the last 21 trading day closes to work out your signal. If we were to look hourly, then what you can see is, if we choose hourly, then I've got the last 7 hours, the last 14 hours, and the last 21 hours. What this does is provides a set of signals for the trader, and what I'm looking to do is cross a short moving average with a slightly longer moving average with an even longer moving average. The theory being that if I allow for the short moving average to cross above or below the medium moving average, then that gives me a buy or a sell signal. If I allow the medium moving average to go above the long moving average, then that provides a confirmed buy or sell signal. Let's have a look at this on a daily chart. Looking at this daily, I can see in this instance, and I'm looking at the Aussie dollar to trade here, I can see that I have over here a cross where I have a cross where the pink line, which is the 7-day moving average, crosses over the green line, which is the 14-day moving average. What this signals is I should look to start getting long. Then I see that the pink line has crossed through the long-term moving average, and this is a confirmation signal to stay long. I might buy Aussie at this point and let it run higher. Then I may go over to look to see when I want to exit my trade. This may occur using the same method. However, in this instance, I want to see if the short term crosses down through the medium and then down through the long, and that will determine whether I take a short position or close out. Obviously, there are a couple of pitfalls with using this method. Firstly, it can take time to get a signal, which means you miss out on some profitable trading pieces. Secondly, if you go too early, you may be what we call whipsawed, so you get in and out and in and out and constantly cross the spread, and that costs you substantial amounts of money. And finally, it takes time to get the hang of when something's pushing through and when something's not. The next one we're going to look at is moving average convergence divergence. Moving average convergence divergence is an indicator of the change in a security's underlying price trend. The whole idea being that when a price is trending, it's expected that people will try and push it one way or another against that trend, thinking it might turn. What we're trying to do is work out when that trend becomes exhausted. And how we do that is we take a fast exponential moving average and a slow exponential moving average, and then we take a signal line of the two. And what this signal line is we take a signal line. The signal line is a period moving average of the moving average line. So basically we're saying take the two averages and then take the average of the average. What we do then is take that MACD and minus that to give us a difference. And then what we're looking for is changes in that difference. And what we can see, if we look in this instance, is if I go to a period where the line is crossed, and you can see that there, what I can see is that in this case, the moving average has given convergence and divergence has given me a signal well before my simple moving average has. If I go back to another part of this chart, you can see the same thing has occurred. It's given me a signal well before. However, in this instance, what I want to do is then use some simple moving averages to confirm. However, in this instance, if I had sold my Aussie here, I would have been stopped out almost immediately because the market didn't continue on lower. This is where you need to use a couple of technical signals as confirmatories. So far we've covered simple moving averages and how to set these up, and we've also covered off moving average convergence, divergence. I'll look at another tutorial putting more of these together in the next video. This has been another video from FinShoot. If you like these, please visit us at finshoot.com, like us on Facebook, follow us on Twitter, and subscribe at YouTube.